Good morning, and thank you for joining us this morning. I want to thank you all for taking some time out to listen in on the webinar this morning with Jake Quaglioli and myself, Marcus Solar here at Insurance Agency Marketing Services. Wanted to thank Jake for joining us this morning. Nassau Re is a great partner of Insurance Agency Marketing. They bring some industry-leading products to the marketplace, especially in today's marketplace with the personal protection choice annuity and the growth annuity, two of the top industry products. If your clients are looking for accumulation or that personal protection choice with the possible long-term care need down the road, Jake will be covering all of those different products in the product portfolio later today in the webinar. If you do get pulled away from the webinar this morning, please keep in mind that this is going to be a recording. So if you do need a recorded copy of this so you can go back and listen to it at your own convenience, please let me know. I'll be more than happy to get you a copy of this out this morning. Also, we will be covering a number of different topics this morning. So if you do have questions as we go along, please be open to asking those in the question box down on the right side. We'll try to answer those as we go through here. Again, I do appreciate you taking time to listen in on the webinar this morning. Again, my name is Marcus Solar. I'm one of the annuity directors here at Insurance Agency Marketing. And let's go ahead and get started this morning. We do have the new producer bonus program that we do offer advisors coming on board with Insurance Agency Marketing Services. It is a way for us to say thank you and welcome aboard to Insurance Agency Marketing. Anything from 100,000 in single premium life production to fixed indexed annuity production, all the way to $1 million in business for the first 66 months or 180 days that you're on board with us. You can pick one item from this program to help leapfrog your business. Anything from a 1,500 piece postcard mailing to $750 in cash, all the way to 8 to 10 preset appointments to help keep your pipeline full. Again, it's a way for us to say thank you, welcome aboard, and we're looking for a long partnership for many years to come. We also have the Insurance Agency Marketing Services Business Builders, a way for us to help you increase your capital. As we fully understand how expensive it is to run a practice, we want to help share in those costs as we help build that partnership moving forward. We have the referral producer program, and we also have the marketing reimbursement program. Through the marketing reimbursement program, for every 100,000 again for either the single premium life or the fixed index annuity business, we put $100 into that marketing account that you can use for expenses, either office expenses or advertising expenses moving forward, to help offset any expenses within your practice as we build that partnership for many years to come down into the future. We also have some of the best back office support here in the office, anything from case design on the front end, quotes, paperless contracting, our contracting area, to advertising, all the way to the back end support. Amber Williams and her team will do the follow-up on your case. Once they've been submitted, they will scrub them for you, make sure that's a seamless process so that you get paid faster and you can do what you do best, which is stay in front of your prospects and clients and continue to write more and more business. We do offer Firelight here through Insurance Agency Marketing Services. It is an electronic app process. We currently offer a number of different carriers on that platform. We are offering a promotion for July and August through this platform. If you do sign up and you're currently contracted through Insurance Agency Marketing and you do place your first piece of business through the Firelight system, you do earn a $50 gift card. If you continue to submit applications through that system for July and August, you can be entered into an ongoing lottery program where we will pull names for ongoing gift cards for both those months as well. So again, a number of different carriers are available, and we expect many, many more carriers to be approved here very, very shortly. We do have one of the best creative marketing solutions department in the industry. From anywhere, wherever you are within your business, whether you're just starting in the business and you need help with either your marketing, advertising, your letterhead, your logo, we'll help create that from day one. Or if you've been in the business 20 or 30 years and you want advertising from a standpoint of TV advertising, radio, we can certainly help you out at that level as well. So if you have questions on the creative marketing solutions, please call Jacob Tedlock in our marketing area or Curtis Hawks. They'd be more than happy to answer any questions with regards to creative marketing solutions. We do have the IAMS website available to you 24/7. If you do need access to forums, industry articles, links, current news, annuity grid or long-term care, life grid for quoting purposes, it is all available to you when we are not here in the office. One thing unique to insurance agency marketing services is we do not have voicemail here in our office. We answer all phone calls live. We do not believe in voicemail. We know that you're out there working very, very hard in the field. So every call that comes in to our office, we do answer within the 3-ring challenge. We do have insurance agency marketing services, which is the financial choice for financial advisors. If you are considering looking at getting your Series 65 license to help deepen the relationships, build continuing revenue with your current clients, and build that and strengthen relationships, please call Charles Hearing Jr. here at the office. He'd be more than happy to answer any additional questions for you on that side of the business. We do also offer our industry recognized Life and Annuity Academy. It is a 2-day producer training event. We are hoping to hold one of these yet this year. It is an event where we bring in 4 of our top multi-million-dollar producers. Not only do they share with you what they do to keep their prospecting pipeline full, they share with you their sales process from A to Z. And we also talk about advanced sales tools on the annuity and life side. We also talk about Retirement Analyzer, which is a retirement income software planning tool. We talk about turnkey seminar systems and what other advisors are using in today's age to keep their pipelines full, indexed annuities, and what we're seeing there and now and into the future with the new COVID going on. So we're going to be talking about several different topics within the industry today. If you want more information on the Life and Annuity Academy, again, this is an event that we fly advisors in. There's no cost to the advisor. It's typically covered from insurance agency marketing and the co-sponsoring carrier. Please give our office a call for any 2020 dates upcoming here now and into the future. At this point in time, I'm going to go ahead and switch it over to Jake. Wanted to thank him again for taking time today to come in and share the Nassau portfolio with us. As I shared before, this is one of the strongest portfolios of products available in the marketplace today based on clients' needs. Again, we're going to be covering a number of different products and specs on those products. There's some exciting new changes with the Nassau product line, which I'm sure you'll all be excited to hear about this morning. So, Jake, go ahead. Again, I appreciate your time. Thank you.
Awesome, Marcus. Well, thanks for the intro, and thank you to everybody for jumping on the call here today. I know obviously a lot of new things happening, if you will, from an industry perspective today. When Marcus talked about COVID, keeping the pipeline full, obviously the life and annuity training, a lot of the things that we're used to doing in this business to sort of stay on top of things, to keep that pipeline full is changing. And who knows when we'll get back to the way business was, if we ever get back to that type of full business before. But what you're going to see now, Marcus and I were actually talking about this prior to jumping on the webinar today. This is a great time to be talking about index annuities. You know, we have that sort of upheaval, if you will. Consumers are thinking about what happened in March, what's been going on since then. You know, this is coming off of an 11-year bull market run where the biggest challenge, the biggest pushback that I had in talking with advisors was, hey, I love everything you're telling me about these index annuities, but hey, I look at my 401k statement, I look at my IRA, and it's been growing at, 10, 12, 14, 20% per year, struggling really with the idea concept of repositioning assets. Well, now what we need to do is, again, show that there is some vulnerability there, and there's a great time to be talking to clients, to be talking to prospects, repositioning assets from a guaranteed perspective. And we're going to get into some of those solutions. We're going to talk about ways that these products are being positioned in today's marketplace. But before we do that, I want to quickly highlight sort of the 60-second overview of who we are. Nassau Life and Annuity Company, a company that's been around for almost 170 years, in business since 1851. You can see today we have nearly 500,000 policies in force and over $24.5 billion in assets under management. One of the things Nassau recently did was actually closed a sale. We purchased Forster's Life of New York. So that adds another potential opportunity into the portfolio for some point down the road. So we are a large organization, insured Abraham Lincoln. We've got that rich tradition. We've been around doing this for a long, long time. Nassau came in 2016 and purchased, at the time, Phoenix Life and Annuity Company. And from 2016 to 2019, really put the company through a major transformation. We're going to talk about some of the transformations from a product standpoint. You're going to see that in the portfolio. Marcus talked about continued enhancements to the portfolio, which have recently taken place. We're going to talk about enhancements from an operational standpoint. Continued enhancements on that front, enhancements on getting business through the system from a suitability standpoint, from a virtual resource tools. We're going to talk through some of those changes. But most importantly, to you and your clients, we're going to talk about the transformation from a financial platform. Today, you see our solvency ratio as a company sits at 105%. And what that means for every dollar of liabilities Nassau has, we have $1.05 in assets on the book. That puts us very well positioned with some of the top-rated companies in the industry today. One of the other things that you'll consistently hear talked about is RBC, risk-based capital ratio. States require companies to be at 125%. If a company falls below that number, they're going to come in and do a financial review of the company to make sure solvency is not a concern of that company. Nassau today sits at over 550%. So we're 4 or 5 times above where states require you to be from a minimum perspective. All that means, we talk about these transformations. Everything that Nassau is doing to run this business is to provide solutions that when your client is ready to access the benefits, when they're ready to access the guarantees, you and your client know that what you sold them, whether it's 30 days ago or 10 years ago, those benefits are going to be there. Back in May of 2019, Nassau actually received an AM Best upgrade, one of only 3 companies that I'm aware of over the last several years to receive an upgrade. So again, it's just confirmation that everything that Nassau is doing is continuing to move the company in the right direction and can put you and your clients at a peace of mind, give them that comfort level that, again, when we talk about the products, you heard Marcus mention it, some of the best guaranteed products in the marketplace today, a great accumulation product. And what we're able to do is provide a product portfolio with a broad range of solutions. As I like to call it now, maybe we've got some clients who are a little bit more bearish. That volatility, the ongoing COVID concerns, being an election year, a lot of things outside of our control can really impact sort of our plan for retirement. Well, we've got our personal income annuity, personal protection choice that are really built on guarantees. And we're going to hammer those home in our presentation. And I'm going to show you a couple ways in terms of how these products are being leveraged and utilized today. Maybe you've got clients that are a little bit more bullish, and they see this as a great opportunity. Yes, they're still concerned about market volatility. There's a lot of unknowns, a lot of things to continue to sort of address themselves over the coming months, over the coming years. but they see this as an opportunity to really get in at a discounted rate in the markets, but they want that protection. That's where we're going to talk about the Nassau Growth Annuity, one of the top accumulation products in the marketplace today. This is when we talked about the transformation of a portfolio. This is a new product introduced by Nassau. The newest product really focused from an accumulation standpoint. And when we designed this product, what we wanted to do is give you some consistency, but also give you and your client the opportunity for that home run. And you're going to see with the Nassau Growth Annuity, flexibility and opportunity. Those are words we should be using a lot when we talk about this product. From a design standpoint, again, great flexibility. Marcus and I, again, we're talking about this up front. We're seeing a transition to shorter term accumulation products right now. I think a lot of that is due to, again, the uncertainties, the volatility that's out there. With the Nassau Growth Annuity, we have a 7-year product that has up to 10% liquidity option. We have a 10-year product, little higher participation rates. You're going to see from a liquidity standpoint, 5% penalty-free withdrawal, but also the opportunity to attach 2 different income riders if the client's looking for maximum upside. And one of the other great things is we continue to get feedback from producers, from organizations like Insurance Agency Marketing. We want a product that continues to provide solutions, not only for a more broad range. And back on July 1, so less than a month ago, we increased the issue age of the Nassau Growth Annuity up to age 85. Now, the one thing I will say is with this increase in issue age, for anything 81 to 85, if they elect the 10-year accumulation product, there are no income rider options available for that age bracket. Again, it's going to be solely focused on accumulation opportunities. So let's break the product down into a little bit more detail and show you some of the product benefits. First and foremost, with that 7-year product, some strong liquidity, up to 10%, available as soon as 30 days after issue. Strong accumulation opportunity. We're going to show you the sizzle of this product, which has up to 106% participation rate. One of the other great differentiators with this contract, though, when you're looking at capturing more of the upside, more of the recovery, the Nassau Growth Annuity has a volatility index that has a 16.5% volatility target. And I'm going to walk through what that potentially means from your client and how agents are positioning this from an accumulation story. Again, we talked about the older issue ages going up through age 85 with the Nassau Growth Annuity. Return of fee built into every single contract. We're going to talk about some accumulation strategies. Again, the sizzle with this product is the growth opportunity. There is enhanced participation rates where anytime a client is allocated to one of these strategies, there's a 1% fee. Again, it's optional, not mandatory. But if your client is looking for maximum accumulation, and at the end of the day, at the end of 7 or 10-year term or at death, if the index didn't return the way that we anticipated and the fee ended up eating away at the principal, your client knows they have the peace of mind that they're going to get those assets back. Quickly, from a 10-year strategy, again, you're going to see a little higher accumulation potential, up to 128% participation rate, plus those 2 optional income riders available 0 to 80 with a 15-year roll-up. Low cost and a higher cost with a built-in guarantee. Before we get into the meat of the product, you see from a state availability standpoint, product is approved in 44, 45 states right now. We do anticipate California, Minnesota, Massachusetts coming on board in the very near future. It was something we actually had expected. We'd already have it, but with the COVID situation, State Department insurance is not working full time. It's been a little slower process in terms of getting products approved. But no, if you don't see your contract there, from an availability standpoint, no, we're working on it, and it should be coming sometime this year still. The sizzle with this product, the accumulation opportunity. You can see we've got some great S&P 500 strategies. So we've got a cap strategy, a 1-year S&P, a 2-year S&P 500 par rate strategy. And with those par rates, no cap, no spread, no fee. You do see with that 1- and 2-year S&P 500 par rate strategies, there is the enhanced participation rate strategy. And with that enhanced par rate, anytime a client has assets allocated to one of those strategies, they're going to be assessed a 1% annual fee to the portion of assets that are allocated inside of that index. Now, they are able on the contract anniversaries to reallocate between any of the 8 different strategies, so you can go in and out of those fee strategies. But the real upside opportunity, where we're seeing 70+% of assets with this contract going into is this 2-year Sunrise Smart Passage Index. You can see again, base par rate on our 10-year Group A states of 90% or 67% on our 7-year contract. Again, that's no cap, no spread, no fee. We do offer, again, that enhanced strategy, that enhanced par rate with the Smart Passage Index that bumps it up to either 128% or 106%. So again, what we're looking at here is we're looking for those clients who are they're a little concerned still about the potential volatility, everything that's going on in the marketplace today, but they're looking for accumulation opportunities. I've got individuals that are using the CARES Act to pull out $100,000 from a qualified account, an IRA, 401k plan, and repositioning it into an index annuity to get the principal guarantees, the premium guarantees that you have, but the upside opportunity. Here's a great way where you can look at either that 7 or 10-year contract. But let's talk about that Smart Passage Index. Let's talk about the design of this index and what it could potentially mean to you and your clients. You can see, first and foremost, it is a low vol index. There is, if you look over time, on average, low volatile stocks tend to outperform higher volatility stocks. So to focus on that concept, what we did with this Smart Passage Index is designed an index that is comprised of the 200 least volatile stocks inside of the S&P 500. Once those 200 stocks are identified, they're inversely ranked 1 to 200, with 1 being the least volatile of the 200 stocks. And the lowest volatile stocks are given the highest percentage of asset allocation. So it's really going all in on that low volatility concept or that low volatility philosophy. Once those 200 stocks have been identified, they've been ranked, we then again apply a 16.5% volatility target. And again, what that means for you, what that more importantly means to the client who's inside of this index, is it's going to give that client more exposure to the index that we're tracking. You look across the industry, I'd say the average vol target is probably anywhere in the 6 to 7%. We'll see a range of maybe 5 to 8% for vol targets. In a high volatile market, what that means is your client is going to have limited access or limited exposure to the index that we're tracking. With a 16.5% vol target, again, they're going to be tracking that index for a longer period of time. And that's the strength of that high volatility target, understanding that we know we're inside of an index annuity. So if we have a year that's substantially down, that's significantly down, we know we've got that baseline protection. But again, by having that higher volatility target, longer access to the index we're tracking, it's hopefully going to give you more access or more exposure to the recovery. And take a look at just some of the raw data that you've got with the Smart Passage Index. Here's annual returns. So we're looking January to December. There's no index, there's no participation rates, there's no crediting strategy rules applied to the index. But you can see 2019, S&P versus Smart Passage Index pretty equal. 2018 was a down year, but again, S&P to Smart Passage about the same. Take a look at 2017. The low vol stocks had a great year. So you're seeing a substantial difference, a 19% return versus a 46% return. That's the upside opportunity that you've got with the Smart Passage Index. 2016, again, the low vol stocks didn't perform as well. S&P outperformed it. But again, we know that you've still got that upside opportunity with the downside protection. And that's the opportunity, again, knowing that you still have some S&P strategies as well to plug in alongside that Smart Passage Index. And look at some of the returns. Here we're looking at that 2-year Smart Passage Enhanced strategy. In the most recent 10-year period, $100,000 would have grown on average 7.8% or grown to over $194,000. In its best 10-year period, that same $100,000 would have grown to almost $250,000, or roughly 10.5% average annual return. That's inside of an index annuity. Knowing worst case scenario, again, we've got those baseline protections, and we can put together, the great teams at IAMS can put together a customized illustration for clients that you're working with to show you the upside potential that you have inside of the Nassau Growth Annuity. Now, one of the other bullet points we talked about, or differentiators that you have with the 10-year contract, is the opportunity to attach one of 2 income riders. I want to focus on our amplified income. So this is our base low-cost income rider. The cost of this rider is only 0.25% or 25 basis points. And the way it works is we're going to grow your client's benefit base, or we're going to grow their income account by 150% of income credits. So think about that. You had a base par rate in that Smart Passage Index with no fee of 90%. You take that 90% par rate, attach this amplified income rider, so for only 0.25% per year, that client's income account is going to grow at 150% of index credits based off of a 90% par rate. When you put it all together, let's say we went with the enhanced par rate of 128%. That would be a 1% fee. You attach the 0.25% rider, which again is going to grow at 150% of index credits. Now your all-in fee is 1.25%. Still probably less than than the average income rider out there today. So you got a great complementary sale on a non-guaranteed basis with the Nassau Growth Annuity. And here you can see with that 10-year product how the income would have performed in its best 10-year period. $100,000 would have grown to over 12.5% per year, which equates to over $17,000 in guaranteed annual lifetime income. Again, the strength with the Nassau Growth Annuity is the non-guaranteed accumulation opportunity. We continue to see a transition to shorter-term accumulation products, and the Nassau Growth Annuity is a great opportunity to plug and play into that space. In addition, here you can see with that low-cost rider, 0.25%, again, $100,000 premium after 10 years would have grown to over $17,300 in lifetime income. 15 years, over $36,000 in income. So again, it's taking the best of both worlds, that low vol strategy, the uniqueness of that 16.5% vol target, and a low-cost income rider to really look at maximizing accumulation opportunity. But let's quickly transition. And now we want to focus on those clients that we're working with that might be a little bit more bearish. Clients that are concerned about market volatility. They're concerned now that the markets have rebounded since the lows, obviously back in March. They're looking at repositioning assets and taking volatility off the table. Well, Nassau continues to offer one of, if not the top, guaranteed lifetime income products in the marketplace today with our Nassau Personal Income Annuity contract. Depending on your client's time horizon, if they're looking to transition to the distribution phase within the first 3 years after issue, we're going to elect the Income Today rider. This is going to give your client an immediate 30% bonus to their income account or benefit base. If they defer turning on that guaranteed annual lifetime income at least 1 year, at the end of the first contract anniversary, we add another 7.5% bonus to the benefit base. And at the end of the second contract anniversary, or the end of the 24th month, if that client still has not turned on that guaranteed annual lifetime income rider, we add another 7.5% bonus, giving them a full guaranteed 45% bonus to their income account. If their time horizon is a little bit longer, so maybe it's going to be 4+ years before they take income, that's where we're going to elect the Income Tomorrow rider, which grows the client's income account or benefit base at a guaranteed 14% per year for up to 10 years on a guaranteed basis. So again, here's a great product, whether we're using the Income Today or Income Tomorrow rider, to give that client's income account, maybe offset some market volatility losses that they've experienced in a 401k and IRA. And let's make them whole from an income perspective. Or let's get a client who's concerned about market volatility, but they're not thinking they're going to retire till 5, 6, 7, 8 years down the road. Well, let's elect that Income Tomorrow strategy and guarantee their income account is going to grow at 14% per year. One of the other great ways that this product is being positioned today is I have producers using that Income Tomorrow strategy as a cost of living increase. So what they'll do is they'll elect the Income Tomorrow rider, but that client has an immediate need for income, whether that's as soon as 30 days after issue or maybe 1 or 2 years down the road. Instead of electing the Income Today rider, what they do is they elect the Income Tomorrow rider, and they'll use the flexibility of this product, the opportunity to take up to 10% out as soon as 30 days after issue through the penalty-free withdrawal. And what they'll do is year one, or whenever that client needs income, they'll say withdraw 3, 4, 5% using the penalty-free withdrawal. Now, why they do that? The income account is going to continue to grow at 14%, proportionally reduced for the withdrawal that comes out. But if you do that for 4, 5, 6 years and really maximize that 14% roll-up, when that client finally elects to turn on that guaranteed lifetime income rider, you're going to have a substantial increase on a guaranteed basis. So it's a great way to leverage the contract and maximize the benefits. Now let's quickly talk about, along with the growth annuity, the fastest growing product inside our portfolio. This is a product, as I talk to advisors about this contract, they always say, how did I never hear about this product? How did I not know the strengths? I have advisors using this product as a post-hospital stay. How is that client going to protect their assets, protect their income if they were to maybe go into a hospital for a month or two because of a medical situation, a COVID-related situation? And when they come out, now they've got increased medical concerns or increased medical needs, but they only have a bucket of assets that they need to make sure is there for their entire life. Well, back in May, we made this story a lot more easy to tell when we increased the availability of our care benefit in additional 17 states. Now, everywhere this product is approved, outside of the state of California, you have the opportunity to provide income guarantees, in-home care or nursing home enhancements, and enhanced death benefit, all inside of one product with one premium. Now, you see with this contract, the income today, income tomorrow rider is identical to what you had with personal income annuity. The difference is the payout factors are slightly reduced. So you're not getting as high of a guaranteed lifetime income with the personal protection choice as you were with personal income annuity. Still getting a very, very competitive income, just not the top in the industry. So for a client who's willing to take a little less income, but has a care concern, here's a great way to leverage this contract. You can see with this product, if your client were to go into a nursing home, we're going to increase their guaranteed lifetime income that they were receiving or they would receive at that year by up to 250%. We're going to pay that benefit directly to your client, and we're going to pay it for up to 5 years as long as they continue to qualify, even if the account value is depleted to zero. Maybe that client doesn't go into a nursing home, but they're not able to fill 2 of 6 ADLs and they need in-home care. In that situation, we're going to increase the client's income that they were receiving or they would receive by up to 175%. Again, we're going to pay that benefit for up to 5 years as long as that client continues to qualify, even if the account value depletes to zero. And I stress that point because as far as I'm aware of, Nassau is only one of 2 companies that pay this benefit even if the account value has been depleted to zero. And why is that important? Think about when the average critical care or nursing care stay starts. It doesn't generally happen when a client is 55, 60, 65 years old. It happens late 70s, 80s, when a client's probably been taking income for 10, 15, maybe even 20 years. Substantially reduced account value, then if we were going to double that or increase that benefit, it's going to burn through the remaining assets. Well, at Nassau, again, we're going to give that client peace of mind to know they're going to be able to get the protection or coverage they need by guaranteeing that benefit's going to pay up to 5 years, even if the account value depletes to zero. The other great differentiator with this benefit is that it's transferable. And what I mean by that is really at the end of the day, you can stop this rider. Let's say you had a spousal situation. Spouse 1 went into a nursing home. Those clients received a 250% enhancement for 2 years until spouse 1 passed away. Surviving spouse keeps the contract in force. So we revert back to that guaranteed lifetime income amount. 10 years down the road, spouse 2 goes into a nursing home. There's still 3 years left of that 250% enhancement that they would be able to access. So again, peace of mind to ensure that client gets the coverage and the protection that they need. That's the benefit that you have with the care protection rider. On top of that, we also have the opportunity to attach our family protection, our enhanced death benefit. So we've covered an income need. We've elected our time horizon of today or tomorrow. We have the opportunity to attach the care protection benefit, which is going to cover a client if they're in a nursing home or need in-home care. But let's say that legacy was also a concern, but we had a small bucket of assets that was there that needed to protect that client throughout their retirement days. Well, here we can attach that family protection rider, which is going to grow that client's premium at 10% simple through age 70, 5% simple age 71 to 85 for a max of 10 years or until the client turns age 85, whichever comes first. 60-year-old client with a $100,000 premium, at age 70, as long as they hadn't taken any withdrawals, they have a $200,000 guaranteed lump sum death benefit. If that client were to pass at age 70, that full $200,000 would be payable in a full lump sum to the beneficiary. Again, peace of mind, ensuring that client is protected in all the different ways. And we've done this all with one premium and no underwriting that you're typically used to with these types of products. Now, let me show you a case design in terms of how this product is being leveraged today, how I have a couple advisors using this contract successfully to close more sales. Let's say we've got a 65-year-old couple. They have a $250,000 premium. It was a 401k that they had built, and it was earmarked to be their retirement. They're looking to start accessing these assets at age 70. So we have a 5-year deferral. Now, what's happened when you met this client, when you're out there prospecting, they obviously have some elevated concerns with the pandemic going on, worried about post-hospital stay. Well, here's how the advisor is positioning this product using the PPC story. Let's say first and foremost, we take that asset and we're going to elect the income tomorrow strategy. We're going to grow the benefit base by a guaranteed 14% per year for 5 years until the client turns age 70. At age 70, we do a joint payout, which provides over $16,500 in lifetime income for that client, no matter how long they live. After that couple has received that income for 11 years, they've received now over $182,000. Spouse one goes into a hospital for a couple months, recovers from that illness, and comes home. Upon release, though, that individual is not able to fulfill 2 of 6 ADLs, and they need in-home care. What Nassau is going to do is we're going to increase that $16,575 to now over $29,000, and we're going to pay it to that client for 3 years, or receiving over $87,000. At the end of 3 years, spouse one unfortunately passes away. Spouse two keeps that contract in force. So we revert back to that $16,575. And spouse two receives that $16,575 for another 7 years, or over $116,000 in income. At age 91, spouse two has some medical challenges and also needs in-home care. Well, there's 2 years remaining on that enhancement of over $29,000 that client receives, or over $58,000 in benefit. After that 2 years, that 5-year enhancement is fulfilled, spouse two lives another 2 years and receives that $16,575, or over $33,000 in benefit. Take a look at what that's meant for that client, for that couple. A $250,000 initial premium translated to over $476,000 in benefit. When that first spouse had those medical concerns, that hospital stay, where they came out and they weren't the same, Nassau ensured that client didn't have to deplete those assets to get the coverage that they needed. Here's a great way, again, packaged inside of one product to really sort of leverage the opportunity of post-hospital stay. So you got a lot of different ways that you can use these guaranteed products. We've got some great drip marketing pieces available to talk about the strength of this contract. You've got the entire team at Insurance Agency Marketing can get this information over to you so you can send it out to prospects to try and fill that pipeline during these unique times. But at the end of the day, the personal protection choice from a guaranteed basis really allows you to separate yourself from the competition. The design of the product, all packaged inside of one product, is why I consistently, again, as I talk to advisors about this product, they say they were never aware of all the different ways that you could leverage this contract, all the great benefits. And if they had any idea they'd be selling this contract. And that's what we're seeing in terms of the growth of the personal protection choice. Now let's quickly take the last couple minutes, and I want to highlight a couple of the virtual resources and tools that are being utilized successfully in today's marketplace. First and foremost, Nassau operates on the Firelight system. We have our e-app capabilities. The great thing with the Nassau contract is you never actually need to meet face-to-face with a client. We offer e-signature capabilities. So once that application is complete, you as the advisor can package that up with the e-signature option, send that over to the client via email. They click a consent button, which acts as their signature on the application, and it's then submitted into Nassau. In addition to that, launched on 7/1, we started doing our e-delivery system. So it's a way to add efficiencies back into your business. Maybe that client that you're working with lives an hour away. You receive that contract and you didn't have the time to go out there to deliver it for a week, 2 weeks, 3 weeks, whatever that time frame may be. With this e-delivery system, here's a great way. We deliver the contract to you. We deliver the contract to your client. You can set up a virtual meeting over the phone, Zoom, whatever it may be, walk through the contract without having to jump back out there, but really finalize that sale. That's an opportunity that's obviously now available to you through insurance agency marketing on the Nassau platform. One of the resources I get a ton of feedback for advisors that have jumped on board with this is we're continuing to offer our on a weekly basis, have our podcast, That Annuity Show. We've been doing this close to a year now. We bring in industry experts, chief financial officers, chief marketing officers, different ideas and covering different topics that are really front of mind during the time frame that we're in. Here's a great podcast that you can jump out. Again, hopefully insurance agency marketing has that life and annuity 2-day training. It's a great course. It's a great opportunity. But in lieu of some of that stuff, here's a way that you can, again, stay on top of things and continue to position yourself as an industry expert in the marketplace that you're in. We have client-approved training courses. So I have a couple agents that what they've created is an email resource packet when they're talking with a client or talking with a prospect. And they include the link to these courses. What's an index annuity? How do income riders work? What's a multi-year guarantee act? The Secure Act. All these different courses are out there. They're free to consumers. They can go out there and take these courses on their own time and get additional information if you're not meeting with them face to face. And last but not least, the other resource that we're getting a ton of utilization out of is what I'll call our Universal Plan Right, Retire Right brochure. This is a resource that we actually just created and made digital over the last couple of weeks. And you can see, to me, this is a non-invasive way to start a conversation with a prospect. The first couple pages talk about define your plans for retirement, both personal and financial. And it gives that client an opportunity or an area to fill in some answers. Then we talk about common risks among retirees, longevity, market volatility, 6 or 7 different risks. And on page 2, we go into a little bit more detail. So again, it's a way then you can get this to a prospect. You can get it to a client, have them fill it out, and then set up a follow-up conversation and start walking through this. Again, it's a non-sales way, non-product way to begin a conversation showing them the value that an index annuity can provide. And again, seeing a ton of utilization of this resource, of this brochure, just for that purpose. Finally, insurance agency marketing offers a ton of great value. You saw it in Marcus's presentation at the beginning of the presentation. For those of you working with the company, I know there's obviously a lot of things there, which is why you're working with them. But contracting with Nassau through insurance agency marketing also allows you the opportunity to qualify for our Elite Advisor program. And get this, for only $1.5 million in FIA sales for calendar year 2020, you qualify for 3 great benefits. 1, elite level service. You're going to have a new business case manager assigned specifically to your business, and they're going to work your business going forward so you or somebody in your office can build that relationship. In addition to that, you will qualify for compensation enhancements. So we have a year-over-year bonus. Individuals who qualify for their first year at the end of the year will receive a 50 basis point compensation bonus on their entire block of sales for the calendar year. If you qualify for a second consecutive year, we increase that bonus up to 75 basis points. And again, we'll pay it on your entire block of business. So if you achieve $3 million in sales with Nassau in 2020, you're going to receive a 50 basis point bonus in January of 2021 on that entire $3 million in sales. And last but not least, if you're one of our top 75 advisors, you're going to qualify for in April of 2021. At this point, we're scheduled to go to Sonoma, California. So you and a guest are going to join us and 74 other producers to celebrate your successes, to thank you for your business. Name me another company where only $1.5 million in sales will get you those 3 great benefits on top of our strong compensation already on this product. Those are the values that you have for contracting with IAMS, with Nassau, and the opportunity that you have with the Nassau Elite program. So with that, I'll kick it back to Marcus to wrap things up for today. But again, Marcus, I want to thank you and the entire insurance agency marketing team for the opportunity to present today. I want to thank everybody for taking time to jump on the call, and I'll kick it back to you to wrap things up. Thanks, Marcus.
I appreciate it, Jake. Thank you. I want to thank you for the great partnership. If you're interested in getting more information on Nassau, I'm going to throw out a poll here. If you have questions for Jake, now would be a great time to ask. I do have a question out here, Jake. They're wondering what products are available out in New Jersey at this point in time.
So in New Jersey, we have actually all products are available except the Nassau Growth Annuity. So when I showed that state availability chart, that was only for the Nassau Growth Annuity. All other products are currently approved in the state of New Jersey.
Okay. All right. Yeah, if anyone else has any other questions, please feel free to put them in the box below. But Jake, I do appreciate your time. If you want more information on Nassau, please fill out the poll there. I'll be more than happy to get the additional information to you. Any other points you want to cover this morning, Jake? Someone does have a question on what are you seeing as far as product mix? Are you seeing more of the short-term products now or the longer-term products now?
No, that's a great question. We talked about, I think, during the presentation, you saw me with the accumulation-driven product, more of a focus to the Nassau Growth Annuity 7-year. We're definitely seeing, from an accumulation standpoint, and Mark, you and I talked about this as well, but we're seeing I don't want to say a transition, but we're seeing those shorter-term accumulation products really being focused on. So again, when you start looking at the guaranteed products of the personal income annuity, personal protection choice, it's less the duration of those contracts and more the benefit. A client who's looking for that guaranteed lifetime income, they're looking for the coverage the care protection rider can provide, the value that can provide. So contract term is less of an issue. When you're looking at clients who are accumulation focused and driven, again, we're seeing a higher percentage of assets going into the 7-year growth annuity as opposed to the 10-year.
I would agree with you. I'm seeing quite a bit more going in. If people are looking for accumulation, they're looking at a 7-year product versus a 10-year product. But that personal protection choice is getting a lot of looks in today's time. It's probably one of the strongest products out there in the industry today. So I appreciate you covering that.
Sure.
People are wondering if they can get a copy of your presentation.
Without a doubt, what I'll do, Marcus, is following the presentation here today, I will send you over a copy so you will have it. And as you reach out to people, feel free. You can definitely leverage this and get it out to advisors. Yep.
Okay. How about the growth product available in Massachusetts and Florida?
So growth product is available in the state of Florida. Right now, Massachusetts is, as I mentioned when we were talking about the company, transitioning from Phoenix over to Nassau with the acquisition that took place. Massachusetts has not fully approved the company at this point, so the products are not available in the state of Massachusetts. We expected that they would have been approved by June, so end of second quarter. Obviously, we're past that date. Again, COVID had a slowdown effect on that. It's coming. I just don't have any exact time frame because of some of the things that are obviously out of our control right now.
Okay. Any other questions at this point? I don't see any. So what I'll do is I will go ahead and wrap this up again. Jake, I do appreciate your time and the great partnership with Nassau. I'll look forward to following up with each and every one of you. I do appreciate everyone taking time to listen in, but at this point, I'm going to wrap it up and say thank you. Enjoy your day, and we'll look forward to you on the next webinar. Have a great day.